You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 11th day of March, 2025. Thanks so much for joining us. Wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast, that's our live training room. So that one is reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us here in about 50 minutes or so, he'll walk you through the process a couple times. It's very simple. Just fill out the form, hit submit. We'll get your indicators up and running. Your trial will officially start tomorrow, which is a Wednesday, but you'll still get 5 consecutive trading days. And that always applies, whether it stretches over a weekend or a holiday, it doesn't matter. We make sure you get 5 consecutive trading days when you take the trial. And the big one is there's no credit card required. We invest our time and resources in you so that you can take a free look at what we do, how we do it, and at the end of the week make a well-informed, intelligent decision if what we do is right for you. So, in about 50 minutes when Michael joins us, he'll show you first and then he'll show you right before he finishes, okay? Now, I said we do 2 live broadcasts every trading day. When the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. That's everybody, everywhere, on planet Earth with an internet-connected device. Now, there's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but still want to join live. And there will be days when you're busy, can't join live, but do want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. YouTube.com, you already got that part right, /CFRN. YouTube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. One more time, youtube.com/CFRN. Oh, and by the way, if you're new to CFRN, thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. You can see from whence we came to where we are now and everything that happened in between, day by day. Obviously, you're not going to watch them all, nor do you need to watch them all. But it's a great resource to have at hand so you know who you're dealing with. Okay? It's all part of the public domain, as they say. Now, Michael is back this week, as you saw and heard yesterday. So, our schedule, it's all happening today. Last week we were missing a couple of parts because he was taking a much needed, well-deserved vacation, but he's back now. So these two parts are back in. So this is the whole deal. So we're going to start where we always do with our daily devotional. So let's get into that. The topic that we're on right now, we're in day 3 of 5, no regrets. Today's scripture is 1 John chapter 1, verses 8 through 10. And I'm going to share it from the Message translation. If we claim that we're free of sin, we're only fooling ourselves. A claim like that is arrant nonsense. On the other hand, if we admit our sins, simply come clean about them, He won't let us down. He'll be true to Himself. He'll forgive our sins and purge us of all wrongdoing. If we claim that we've never sinned, we out and out contradict God, make a liar out of Him. A claim like that only shows off our ignorance of God. Again, 1 John 1, verses 8 through 10. So, part of this devotion on no regrets deals with forgiveness. In fact, forgiveness is key. So why is forgiveness important? Well, first of all, you and I have been forgiven. God said in His Word that He would remove our transgressions as far as the east is from the west. Imagine a straight line that goes on infinitely. God says that He removes our transgressions as far as that line can travel into infinity. How great is His love. When we accept Jesus as Lord and Savior, our sins are gone, wiped away forever, and forgotten in the mind of God. Sin is heavy and binding. It produces death, and nothing good comes from it. We know that sin is pleasurable for a season, but it always comes with a cost. The beauty of the gospel is that with a simple, heartfelt confession, the penalty for that sin is wiped away. What price did God have to pay for the penalty of your sin and mine? We know that it cost him Jesus Christ, his only begotten Son, dying on a bloody cross. Sin comes with a high cost. But forgiveness is freeing. Forgiveness unlocks the chains that hold you captive to another's influence. Forgiveness is the agent by which God allows healing and joy to come to your inner man. You are free, so be quick to forgive. Remember, forgiveness is a choice and decision of your will, so choose to forgive. We are purified and washed as we forgive our offenders. Therefore, determine to live every day with a forgiving spirit as the offenses come. God forgives and forgets, and so should we. By capturing those thoughts and replacing them with good thoughts. Enjoy your present to the fullest by forgiving people from your past. Choose to consciously release those negative emotions by laying them at the foot of the cross. Let's pray. Heavenly Father, we humbly come before you, acknowledging our sins and our need for your grace. Thank you for your promise that if we confess our sins, you are faithful and just to forgive us and cleanse us from all unrighteousness. Help us to walk in your truth, turning away from sin and embracing the light of your love. May we always seek your forgiveness and extend that same grace to others. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Tuesday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets or the indices. Currently the Dow down 587 points. That's a drop of almost 1.5%. The Nasdaq down 88 points. S&P 500 down 54 points, almost 1%. And the Russell 2000, it's up a half a point. But it's actually, that half a point is actually green on my screen. Now it's a quarter point. But when I see the Russell attempting to turn around, now it could get slammed later, who knows. But it gives me a little bit of hope. In the commodity basket, crude oil up 77 cents, trading 66.80 last. That's a gain of almost 1.25%. Gold up $22.90, trading 29.2230 last. That's a gain of almost 1%. Silver up 66 cents, trading 33.19 last. That's a gain of a little over 2%. And a little over $2,500 per contract traded. In the Asian markets at the close, the Nikkei dropped 235 points. The Shanghai gained 13. The Hang Seng dropped 1.5 points. And in the European markets at the close, FTSE down 104. That's basically 1.25%. The DAX down 280 points. Again, 1.25%. And the CAC down 109 points. Well over 1.25%, close to 1.5%. So that gave us a mixed day in Asia. It was a red day for the UK. And so far, it's a mixed Radio Tuesday here in the US of A, with the Russell now positive by almost 2 points. I never thought I'd say that, but these conditions, I mean, wow. I'll share with you something I wrote in the discussion group a little later. Let's go peek at the news. Canada and China retaliate. The Canadian province of Ontario raised prices on electricity exported to the U.S. states yesterday, adding a 25% surcharge to power transmissions to New York, Michigan, and Minnesota. Ontario Premier Doug Ford said the move was in response to ongoing tariff threats from the Trump administration. An estimated 4.4% of New York's power in 2023 came from Ontario, while the regional grid operator servicing Michigan and Minnesota said that less than 1% of its power came from Ontario. Still, Canadian officials projected about $280,000 per day in revenue from the move, which rides a wave of anti-U.S. sentiment in the country. So, what they're saying is they're willing to lose $280,000 a day. Okay? In related news, retaliatory tariffs from China on U.S. agricultural imports kicked in yesterday. Oh, speaking of agriculture, I think today, it's either today or tomorrow, is the WASDE report. That's sort of like the Fed announcement, but for the agricultural markets. Now, we noticed this morning it was marked as low impact. I think that was an error because in the past it's always been a high impact. I mean, when the WASDE report comes out, it's usually on the 12th of the month, so maybe it's tomorrow. The ag markets just go wild. It's something to see. Don't necessarily recommend trading it, but it can be exciting to watch. Beijing placing 10 to 15% duties on products ranging from pork and beef to soybeans. China is the largest international market for U.S. agriculture exports, amounting to nearly $34 billion annually. Syria. What's going on there is something else. Syria's transitional government, which toppled the Assad regime last year, signed a landmark deal yesterday with a U.S.-backed Kurdish-led militia that controls the country's northeast. The agreement, signed by interim President Ahmed al-Sharaa and Syrian Democratic Forces leader Mazloum Abdi, consolidates northeastern Syria under central government control, including border crossings with Iraq and Turkey, airports, prisons, and vital oil and gas fields. The breakthrough is a step toward unifying the country after years of civil war and sectarian divisions. It is also part of the government's effort to integrate all armed groups formed during the nearly 14-year conflict. The agreement guarantees Kurdish cultural and linguistic rights, which were long suppressed under the Assad regime. Syrian Kurds account for roughly 10% of the country's population. The Syrian Democratic Forces have been the main U.S. partner in fighting the Islamic State. The deal comes amid violent unrest in Syria's coastal regions that has killed more than 1,000 people since last week. Meta. An insider's expose. Meta developed a content censorship tool and offered data access to China in an effort to enter its market, according to a whistleblower complaint filed with the U.S. Securities and Exchange Commission. Sarah Wynne Williams, a former global policy director at Meta, who worked on China policy, said the company created a China-specific censorship system in 2015, and she provided internal documents to support her claims. Now, this has meat on the bone, okay? So often, we get whistleblowers who refuse to be named, or they're just familiar with the situation. But Sarah, be careful out there. She's given her name. Obviously, Meta has her address. Not that they would do anything bad. And she's providing internal documents to support her claims, which of course I'm sure Meta will say that part's no good because she's not supposed to take internal documents. Anyway, China's Great Firewall regulates online content and blocks access to information deemed contrary to the state's interests. The complaint alleges Meta was willing to weaken Chinese users' rights and store user data on servers in China, which would have made it easier for the Chinese government to access personal information, including data from Hong Kong-based users. Meta had reportedly planned to appoint a chief editor with the authority to remove content. Meta denies these allegations. Now, Sarah's given her name and she says she's got the internal documents, but Meta says no. They're saying that the complaint was filed by a former employee terminated for poor performance. The company acknowledged exploring entry into the Chinese market, but said it ultimately decided against it. All right. Wall Street, what do you got? Monday's market meltdown coincided with a major shift in how Wall Street is thinking about the health of the U.S. economy and the current bull market run. The current bull market run? Well, I guess if you compare it to 2007, 2008, or the dot-com disaster, yeah, I guess it is a bull market. Now, PEMCO's CEO, Mohammed El-Erian, had this to say: "You're seeing a complete upending in virtually every single consensus trade that was common at the beginning of the year, everything in stocks, in bonds, in currencies. We've had a complete upending of the conventional wisdom. After 2 consecutive years of strategists chasing the market higher as the U.S. economy outperformed expectations, consensus entered 2025 positioned for another year of above-trend growth in the U.S. economy. Now, we said it so many times, I know people got tired of hearing it. Trees don't grow to the sky, neither do the markets. The markets can't go up forever. That's not how markets work. There has to be a retracement. That's just, And we've had little retracements, but now we're seeing the big one. Okay? We're down at the 62% Fib retracement on the daily chart, which you'll see in a few minutes. Now, economic growth forecasts are moving lower, and strategists are discussing the likelihood that their year-end targets for the S&P 500 might have been too optimistic. Let's see. U.S. equity strategist Laura Calvasina wrote in a note to clients on Sunday, "We've seen the U.S. equity market on a rocky path higher through year-end and have believed that our 6,600 can absorb a 5 to 10% drawdown. The risks of a drawdown of more than 10% have admittedly grown, however. If that occurs, then we see a growth scare of a 14 to 20% decline from peak as most likely, which could shift us into our bear case." In recent weeks, economic forecasting teams from the likes of Morgan Stanley, Goldman Sachs, and others have moved their 2025 GDP projections lower. Morgan Stanley now forecasts 1.5% growth in 2025, and Goldman sees 1.7%. Wall Street's view of where the economy could be headed this year is not out of step with political consensus either, which may be part of what's been bothering investors of late. Last week, President Trump told Congress there could be a little disturbance to the economy from his tariff policies, but added we're okay with that. It won't be much. Now, when you just look at the daily chart, it does look like much. And it is much, but again, if you look at the big picture, going back to the 1990s up to where we are today in this current sell-off that we're in, it's not quite as breathtaking. In an interview with Fox Business on Sunday, Trump said this is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. It takes a little time, but I think it should be great for us. And America said, "We hope you're right." And I think he is. Tesla stock has plummeted and rocketed back to life so many times that it's easy to forgive the analysts and investors who have given up on the ticker at one time or another. If Tesla was a meme stock before there were meme stocks, part of its appeal comes from its seemingly infinite comeback stories. Tesla's Doge area doldrums are, for the faithful bulls, just another point for the next run-up. Chances are you've been wrong about Tesla. The company, the stock, the Musk stand-in, at least some of the time. Before questions about the negative impacts of U.S. and European political interference, there was ceaseless discussion about Twitter and a distracted CEO And before there were other red flags concerning Chinese competition, there were worries about production hell and bottlenecks after the company debuted the mass market Model 3. And let me mention, Tesla's up $7.60 today, which is almost 3.5%. There have been a number of times in the Tesla story over the past decade that negative sentiment and street worries have overshadowed the narrative of this unique, disruptive global tech story. Now that comes from Dan Ives, a Wedbush analyst who is a stalwart Tesla bull. But if you embrace Musk's vision that Tesla is not merely a car company, he continued, this is the start of the biggest innovation and technology cycle in Tesla's history ahead over the next few years. Analysts with a more critical take on Tesla's business knowledge, the potential of Musk's autonomous ambitions, but they see that upside already baked into the stock, which they believe is overvalued even when you consider the financial goodies flowing from humanoid robots and a fleet of robo-taxis. Well, whatever happens to Tesla, I'm not ready to bet against Elon. And honestly, I think those who do hold Tesla do so more along the lines of Elon Musk and their belief in him than they do another electric car company. From Reuters, U.S. job openings increased in January, but demand for labor is likely to soften in the months ahead, amid concerns that uncertainty over import tariffs and aggressive government spending cuts could cause a sharp slowdown in economic activity. Job openings, a measure of labor demand, rose 232,000 to 7.74 million on the last day of January. The Labor Department's Bureau of Labor Statistics gave us that information in its job openings and labor turnover survey or JOLTS report today. If you ever wondered what the JOLTS report stood for, Job Openings and Labor Turnover Survey. Data for December was revised lower to show 7.5 million vacancies instead of the previously reported 7.6. Economists polled by Reuters had forecast 7.63 million unfilled positions. Trump says he will buy a brand new Tesla to show support for the electric car maker's chief and his ally Elon Musk amid recent Tesla takedown protests and the slump in the company's stock price. I know you've seen it on the news, the firebombs, the Molotov cocktails, the disruption, the disturbances, the paid actors, the paid protesters. Who raised these people? I don't know. Obviously. Shares of the automaker rose about 3% in pre-market trading, and it's up over 3% right now. Musk's role in sweeping cuts to the federal workforce at the behest of Trump has led to protest in the U.S. against Tesla. Now, I mean, any common sense person can see that what's happened is over the last month, the lights have been turned on, the covers have been pulled back, and billions, if not trillions of dollars of waste fraud, and abuse have been uncovered and shown transparently to the American public, who many had no idea. Most Americans don't follow the markets every day like we do, step by step, tick by tick. They get up, they go to work, they do their job, they come home, they love their family, right? Go to church on Sunday kind of thing. So a lot of Americans are really shocked to find out that their hard-earned taxpayer dollars are going to things like transgender mice. Now, you can actually go to doge.gov, and the transparency is incredible. You can see exactly what tax dollars are being spent on, and it's not pretty. Now, Elon's part in the job is simply to expose the fraud, waste, and abuse. He's not the one that actually fires people. He gives his recommendations to the president, to the secretary, the various secretaries, members of the cabinet, and they pull the plug. But because he's exposing it. Now, if you were a criminal, in other words, if you were part of this bureaucratic cabal that's been ripping off the American taxpayer for decades, you're the only person that should be upset that this fraud, this waste and abuse has been exposed. Right? I mean, if you're not part of the grift, why would this bother you? Our country is insolvent with $36 trillion in debt. And the fact that people are actually seeing what their tax dollars are being spent on, against much protest, they're freaking out. Anyway, it is what it is, right? Indian telecom operator Bharti Airtel said Tuesday it had signed a deal with Elon Musk Starlink to explore providing the U.S. satellite internet giant's services to customers in India, depending on government approval. Musk has long wanted Starlink to enter the world's most populous market, but its entry into India has been delayed due to regulatory challenges, security concerns, and opposition from domestic telecom giants like billionaire Mukesh Ambani's Reliance Jio. I actually managed to pronounce all of that. All right. How about some good news? Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis, but crude, gold, silver. We're in week 345. Over the last 345 weeks, we've issued over 19,100 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did this recap this morning at 6:30 a.m. Eastern. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 23 alerts. Still waiting on the outcome of 4. That gave us 19 actionable alerts. And so far, nothing has stopped out. But it's only Tuesday. Now, what of these four may, I haven't looked. So, we're keeping with our average of 20% or less on a weekly basis. 19,000, I think 135 might be the last one I published last night. That's a tremendous number of alerts, isn't it? I think it is. 19,000. I mean, I don't have that many pennies in my penny jar. I don't even have a fraction. Anyway, 345 weeks, that's an awful long time. But we just show up every day and do the same thing. And that's the deal. Now, each logic alert has an entry price, an initial target, additional targets, and a final trade to target. Yeah, you can trade them, but the real purpose of the logic alerts is to help you learn how to read a chart. If you're going to trade for a living, you need to learn how to read the chart. It's like if you're going to be a lawyer, you got to be able to read the law books, case law, right? I know I've said that a million times, but you really do need to understand the chart. How price flows, where to expect potential resistance, where to expect potential support, and how to find the windows of opportunity in between. Now, the logic alerts can come out anytime around the clock because futures trade around the clock. We have traders around the globe. Our day session is our night session and vice versa. So a logic alert could come out at 2 a.m. or 2 p.m. So again, if you aren't able to trade it when it triggers, that's okay. You can still use each alert as an example of how to read the chart. Just a matter of drawing some horizontal lines. Now, while the logic alerts can come out anytime around the clock, our original alert service, the concierge trade alerts, they're a little bit different. Number one, they don't come out around the clock. They're posted as a static report shortly before or shortly after the Globex Open each evening. So Sunday night, every day last week we got them out at 5:55 p.m. Eastern. Sunday night, it was 10 minutes after the open. And last night, we got them out 5 minutes ahead of the open. So all of our members and all of our trial members had all of these targets 5 minutes before the open. Now, I made two mistakes. My charts weren't updating. And so I think it's the Russell and the NQ. We kind of got to just toss those out. We're going to still look at the chart. But for whatever reason, those two charts they just stopped updating. All the other charts were updating. So when I did the CTAs, anyway, it was Monday. Okay. So S&P Dow, Russell, I think that's one that didn't update right. Crude, NQ, gold, silver. So I think the Russell and the NQ were the ones that, but you had all the rest of them. And if you're trading one of these particular markets, it should have stuck out to you. Okay? All right. So let's go look at the daily chart. Here it is. We are below the 62% fib retracement. Now this goes all the way back to August 5th. From the low of August 5th to the high of December 6th. This is one of the hugest sell-offs we've had in years. This is big stuff. Okay. Now, I wrote last night not to freak out, and I'll probably read what I wrote right at the end of the broadcast, or you can just look at it yourself in the discussion group. But basically, what I was saying is it may get worse before it gets better, but the indices always move higher over time. For investors, this is very painful. For traders, it's a land of opportunity. But the good news is it will come back. That's how the indices are created. Now, the daily chart's important because it gives you the big picture view. Okay, if you're on a smaller time frame, such as a range chart or 5-minute chart, you don't know that this is the 62% fib retracement, which did give us a nice bounce yesterday. Will it give us one today? I don't know. It looks like it kind of wants to go lower. So where would we expect the next support? Right there, 55.23, and then let's call it 5,500, and then 54.32, and then 53.92. Institutional traders, they look at daily, weekly, and monthly charts the way you and I tend to look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. They have massive account size. They trade in huge size. They literally move price. So whether you trade futures, stocks, crypto, Forex, ETFs, I encourage you to spend 2 minutes with the daily chart of whatever you're about to trade before you start trading, and one, get a free look over the shoulder of the deep pockets that move price, and identify where major areas of support and resistance may be. Now the green line is the BBC. It's called the BBC. It stands for bull bear cross. When price crosses above it, we're bullish and expect higher prices. When price crosses below it, we're bearish and expect lower prices. Now the markets are fractal in nature, and the BBC can be applied to any chart. 1-minute chart, daily chart, weekly chart, monthly chart, 30-minute chart, doesn't matter. It's going to give you results relevant to whatever time frame you're looking at. Now all alerts are created on the 30-minute chart. The vertical line separates today, Tuesday, from Monday. Back over here is Friday. Back over here is Thursday. But these are now this week's zones. Yesterday we had last week's zones. Today we've got this week's zones. And yes, this is this week's lowest weekly trading zone. Now, I explained last night, well, just hang on to, because Michael's going to be here in a minute. I do want to share with you what I wrote last night. And we've already hit 55.50/55. We've hit the lowest weekly trading zone on a Tuesday morning. Historically, over the past 15 years, that has been an indication that if we do that, if we hit the lowest weekly zone by Tuesday morning, there's an extremely high probability that we'll be at the other end of the spectrum by the end of the week. Does it always happen? No. Under current market conditions, is it maybe less likely to happen? Maybe. But has it happened? I'll say it's happened a handful of times over the last 15 years, where we close below the lowest weekly zone or above the highest weekly zone. Probably of late, more often than not, because we've seen such increased volatility. So, right here, see how that didn't fill in? Let's do that. and filled right in. Okay, all right. So remember, the vertical line separates today from yesterday. And this was the opening candle, which dropped right to the short target. Now when the market finds support, see this low from yesterday? It's going to go look for resistance, which it found at the weekly trading zone, 5632/33. It spiked it a little bit, but blue and climbing turned to red and falling, and down we went. We hit the short target, we hit the zone. Support sent us up to resistance at the BBC. Resistance at the BBC has now sent us back down to the zone. Again, this is the lowest weekly zone for the week. So it went from basically zone to zone, back to the zone. On the down, this was the open last night. Remember, everyone had the targets 5 minutes ahead of the open. And we dropped right to the short target. Yesterday's low. Support sent us up to resistance at the BBC in the zone, where we consolidated for many hours overnight until about 8 o'clock this morning. Then we got the bearish cross. That's when the red line gets below the green line. And it took us all the way down to the short target. We caught a bounce, resistance at the black step line, and then back down to the zone, 41,400/41,420. Again, lowest weekly trading zone. Now notice the step line is starting to hook right. If it crosses red and falling, the market will typically attempt a retracement back to the BBC. The Russell, this is the one I screwed up. So just forget this because it's wrong. But what happened? We opened, we dropped to the weekly zone, found support. Whenever price drops to a weekly trading zone, we expect support. When it rises to a weekly zone, we look for resistance. So we went from support to resistance, back to support, back to resistance. And it looks like we, right here, see the step lines crossing red and falling. Maybe we get a pull back to the BBC, which would typically lead to another leg to the downside. But at some point, the price will trade through the BBC. If it does, then you've got the zone, and then you've got potential resistance here, 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 and then you're at the next zone. The NQ is the other one I screwed up. This is where we open, we dropped. If you look left, way left, you can find the support. Support sends us to resistance, which sends us back to support. Now notice that this low, right here, you see where the step line crossed red and falling? Is that not that exact low right there? Yeah, it is. So support sends us to resistance. Resistance sends us to support. Back to resistance. Now we're looking for support, which could come in here, 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 here. Those are all potentials. We're at potential support right now. Okay. If we take that out and you look for this one, okay, we already know that this is this, And so the next one will be right here. Try to get them right tonight. Crude oil. This is where we opened. This was the opening candle last night. And we dropped. We didn't quite make it to the zone. 65.25 was the target. And we dropped to 65.29. So we missed it by 4 ticks. Support sends us to resistance. We consolidated. We got above the BBC, got above the zone, made the run up to the long target, which is this previous bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. We did spike it once, but it pretty much held, and now it's put us back below the BBC, and we're headed back down to this zone, and we have a bullish cross right here. So if we poke through the zone, just keep in mind this area is potential support. Okay, Michael has arrived, so we're going to pause with this recap, and Michael's going to give us a recap of everything that happened this morning in the live training room, and then do some live trading on the TradingView platform. And then I'll come back, finish the recap of the alerts, and we'll wrap it up with our good word for the day.
All right. You should be looking at my charts.
I am, yes. Everything looks fine.
Excellent. Excellent. Okay, we're still a long way off from rolling over, by the way. I looked at it this morning.
Oh, you think next week?
Well, we'll see what it looks like at the end of the week. But, you know, there was not even close on the yes.
Okay.
So we'll see. Hopefully it'll be toward the end of the week, so the zones and everything will be normal and all that.
Okay.
All right. So here we go. Ready. All right. Good afternoon, everyone. Today is Tuesday, the 11th day of March, 2025. Now, if you have not taken a free trial with us and you want to, go ahead to mytradingiq.com and click on the purple button right here. There is no credit card required for the trial. All right, click on that purple button, and it's going to bring you to this registration page where all we ask for is your name, your email, your phone number. Down here at the bottom, if you have NinjaTrader and you want to give us your machine ID so you can get some charts, do that. I won't put it on there, but it's going to say how the machine ID at one point might have been a decent thing to use to identify unique users, but it's not a unique thing, and it changes way too frequently to be used for that purpose. I wish they'd come up with some other plan, but they won't. So we don't really need it. If you're not going to use charts, we don't need the machine ID if you're going to trade on NinjaTrader, but we do need your TradingView login ID, your TradingView username. Okay, so give us that. Now, if you don't have a TradingView username, then you need to go here to mytradingiq.com and click on trading platforms and follow the instructions right here. Follow the instructions right here. Okay, once you've done that, then once you follow those instructions, then you will actually be clicking on this link, and this link is going to bring you to this page where you're going to choose one of these levels of membership. You probably do not need to go above plus. You can probably start out with essential. All right, it's if you do it monthly, it's $14.95 a month. The first month, I believe, is free. I think they give you a free 30-day trial. I'm not sure about that, but I think they used to do that, free 30-day trial. Get that, and then give us your TradingView login ID. All right, now that ID, if you log out of this, right, like this, let me sign out, and then I'll go here to tradingview.com. When you go over here to log in, click on that and hit sign in. All right, the ID, the username is what we need, not your email, your username. So right now I'm signing in with CFRN, okay? When you sign in, it's going to be up here in the upper right-hand corner like that, right? If you click on it, it'll tell you what it is, all right? That's what we need from you. We need that to enable your indicators. Okay. Once you do that, then we'll be able to enable the indicators and get your indicators indicating on your charts for you. All right. Now today we had an okay day, but I stopped trading the NQ after like the first half an hour. Things got really, really wild after the news event came out. And so I replaced it with copper, and I only had one trade on copper. And it was a mistake, and I ended with a break even. But overall today we did all right. We ended up with $1,070 with one contract. Okay, and 78 ticks on the NQ, 14 ticks on the Russell, minus 29 on gold. Gold had my number all day, and plus 72 on the ES. There were a ton of ES trades. For a while there, we were just trading ES. I took the NQ off the charts. I was only doing 3 for a while, and I was told that this is what it was like last week too. So let me finish this and I'll get into that. All right, today it took 10 minutes and 3 trades to get to $2,600 with 10 contracts on. So got the goal for the day there. And again, we took 42 trades this morning. So on the month so far, we're up $2,620 with 2 business days, averaging $1,310 per contract for 2-hour business day. On the year, we've gotten our goal for the day on 39 out of 39 days, 39 out of 39 days. And we've gone 55 days now since our last non-green day. Those are business days, by the way. And there was a week off in there. We've now gone 448 business days since our last red day. Okay, so we haven't had a red day in almost 2 years now. On the year now, we're at $60,102 with one contract over 39 business days, averaging $1,541 per contract for 2-hour business day. Again, got our goal 39 to 39 days so far this year, and 448 business days since our last red day. Those numbers were off by 1 day yesterday. I didn't carry everything down there yesterday, but I fixed it today. So over here, I didn't have any of this ready yesterday, but today I do. If you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year, you would only have to work 6.5 hours and be averaging $1,616 per hour, right? You'd be up $10,560, trading 3 contracts right now, up $10,560. This number should actually be higher, I think, shouldn't it? 5350. Oh, it should be this number divided by, it should be this number divided by 3 is what it should be. I think. Anyway, I'll make sure that, I think that number should actually be a little bit higher, but I'll go back and check it out. But that's roughly where you'd be. 6.5 hours, you'd be averaging $1,616 per hour minimum. Now let's get into the trades. Okay, we'll start out with the gold. We had quite a few trades on gold, and not very many of them were positive. Had a mistake in there, you can see. And we started out here. Our first trade on gold was a break-even trade right here. I went short in that uptrend. That was a counter trend trade right there. I went short, ended up with a break-even. I went short again over here, and I got 2 ticks. Then my next trade was right here. I stopped out, minus 10. Then I picked up, I'm sorry, it was minus 10, but to put me at minus 8 overall. I picked up 1 tick there to get me to minus 7. And right here, I stopped out again to put me at minus 17. Break even. Then right there, I got a plus 5 to put me at minus 12. Then I got something out right here. I stopped out. Okay, that was a mistake. I screwed that one up. I ended up with minus 22. I got a little bit of profit on that. It got me down to minus 19, so I got 3 ticks on that one. Then I stopped out again right there, put me at minus 29, and that's where we ended it on the gold after that minus 29. So this one, the stop, I should have my stop at break even on that one. And I think that was the only mistake that I made on gold. I'd drawn this in here, this leg length, when we were over here saying this is what the market was trying to do. It got down within 1 tick of it, and then it turned around right down there at the bottom. Interesting. A lot of sideways action in here, and usually when you have a lot of sideways action like this, you're gonna have some good opportunities with the gold, or with anything really. So right here where it went up into the overbought, you would have sold the open of that bar. Now it pulled back pretty deep, but it did end up going down right here. You would have bought the open of that bar, and it went up nicely. Right here, you would have bought the open of this bar. It went down first, but then it ended up going up. Right here, you would have bought the open of this bar. That did end up going up enough to get your stop to break even. Right here, you would have bought the open of that bar that made a nice move up. Right here, you would have sold the open of that bar right there, which worked out. You would have bought the open of this bar right here, which worked out. And right now, you would have sold the open of this bar right here, which you'd still be in right now. You could still actually get into that one. If I could find my DOM, I could still get into that one, because the entry point would have been right here and it hasn't gone into profit yet. So I did just short it for you so we can watch that one and see how it works out. Okay. But I did just short it for you. Now the proper entry point would have been here at 22.9. I'm actually in at 23.2. So I'm 3 ticks better than the proper entry, the open of the bar. Okay. And that is that. Now, the Russell today we had, on the Russell, we started out with the stop out on the Russell. Let's just go back there and we'll start out with that. Had a break even here, and then we stopped out on that one, minus 25. Then right here we picked up 20 ticks to get us back to minus 5. We had a break even, and then we had another break even, and we had somewhere in here we had a nice positive trade. Got to keep my eye on this. It's gonna go 4 ticks into profit. Somewhere in here we had a nice positive trade because we went from minus 5 to plus 14, so we had a 19 tick trade. I'm not exactly sure where that was in here, but we ended up with plus 14 on the Russell. Okay, and that is how that all worked out for us. Looking all the way through here, there was nothing there. I'm sorry, there was a long trade right there. There was a short trade right here that would have worked out fine. A long trade there that would have worked out fine. A short trade right here that it had to go 10 ticks into profit to get the stop to break even. I believe it did do that. And a long trade over here that would have stopped you out. A short trade right here that would have worked out just fine. A short trade right here that would have worked out just fine. And that was it on the Russell today. We ended up with plus 14 ticks. I'm going to save the yes for last. Now, on the copper, I took one trade right here. It was a break-even trade, and I thought something looked messed up. When I did it, this looked like it was down in the bottom. It looked like the blue. We just stopped out on the gold. It looked like the blue was in the oversold by itself, but my charts were not right. I noticed that it wasn't right because oversold was right here, like -1, and something wasn't looking right. And I put the trade on anyway. I ended up getting a break even out of that. This is copper, right? So I put it on a 7 range because it was trading nice and slow on the 7 range. I replaced the NQ with it because the NQ was really wild. I'm going to show you the NQ and the trades we took on the NQ, but I did stop trading the NQ after a short while because it was just too volatile. The time frame that we work in anyway. With the copper, you can see it's the same stuff. When it goes into the overbought by itself, you sell it. When it goes into the oversold by itself, right here, you buy it. By itself right here, you buy it. And it overbought by itself, you sell it. Same stuff over and over and over again. Okay, right here, right now, you'd be selling it. It's too late right now because it's already gone 4 ticks into profit, but you would have sold the open of this bar right here. Okay, and that was the copper. Now let's look at the NQ today. Okay, because I did trade the NQ for part of the morning session. So we'll look at that. I'll put that back on a 50 range. 50 range on the NQ. In the yes, we had a whole bunch of trades on the yes. So I'm going to save that one for last, right? So I'm going to hit Alt and back on this. And get us all the way back to here. There we go. There we go. Our first trade on the NQ was right here. It was a break even. All right. Our next trade was right there. That's where we got the goal for the day. It was a 52 tick trade right there. The one after that was a 4 tick trade to get us to 56. And then we had a 22 tick trade right there to get us to 78. And that was where I stopped trading it. It was wild and it was all over the place. When this news came out right here, there was a spread constantly in the NQ. I don't know what it looks like right now because I closed the NQ DOM up. But it just got out of control and it wasn't worth trying to trade. Every trade you took, you were going to lose some money right at the beginning. You can see that it was still giving decent trades in here. We would have had a long right here, the open of that bar. a long right here at the open of that bar, a short right here at the open of that bar, but you see the gap between there and there. A short right here at the open of this bar, a long right here at the open of that bar, a short right here at the open of that bar, a long right here at the open of that bar, a short at the open of that bar. No, I'm sorry, that's not right. A long at the open of this bar. If you just go by the stars, you gotta look down and see if there's divergence. So like right in here, there would have been a short at the open of this bar. And that bar went about 45 ticks into profit before it pulled back even a little bit. It did end up going down nicely. But you see all the trade opportunities, that was just up to 1030. There were a ton of trade opportunities in there on the NQ today. And if those of you guys who don't know, this little star thing, that replaces the labels. When they stop letting me print labels, this is a Pine script limitation. They only allow you to print so many labels. And when they stop allowing me to print labels, I put a star where you would have a label. And you actually have more information over here. I set it up so you have actually more information. You have both sides from the open to the top and the open to the bottom of the bar. It's right here, the sell and buy profit and ticks. Okay. And I did that on every single bar. It wasn't just the ones with the star or the label. It's every single bar. You can see everyone that's got a label on it. The number that's in the label is going to be over here. Like 29 is red, 32 right there is red, 22 right there is going to be red. And the other side of it, this 50 in the red and 0 in the blue because it went all 50 ticks down. This one's going to have 4 in the red and 46 in the blue. Sorry, I said that backwards. 4 in the black and 46 in the blue in this case. It has to equal the ticks in the bar, the total amount of ticks in the bar. Okay, that was a feature that I built in a week ago. All right, so that was the NQ. Now, the ES, we had a ton of trades on the ES, and I only got a fraction of them. So let's hit Alt and back on this. I'll get back to the beginning on this one. Okay. Wow. All those bars in there on the ES. That is a ton of bars for the ES. Now this on the NQ, it's kind of normal, but on the ES, it is not. So let's just get into what we actually did do in here. Okay. On the ES, our first trade was right there. It was a break even. Then I messed up this trade and I stopped out -10. And I got 4 ticks back there to put me at -6. Then there were a bunch of trades in here. I just didn't get them. The market was jumping around so fast and the NQ was jumping around really fast. And I was trying to do both of them at the same time at this point, but I stopped after a while. The S was given plenty of opportunity. So right here, we were at -2, I think. That put us to -2. And then this one here put us at, I got a 16 tick gain on that, put us at +14. Then a 12 tick gain there, put us at 26. Then I messed something up in here. I went from 14 to 26, I think. We got to 26 on this one. And then this was a mistake on my part. And I lost 4 ticks on that. That put me at 22. All right, then I had a break even. I got 2 ticks back there to get me to 24. And then a break even and then a stop out. All right, we had gone from 24 up to 28 somewhere in there. And then we went from 28 down to 18. And then on this one went from 18 to 30. And then went from 30 to 34. Break even, then 34 to 41. Then I messed this one up. And that brought me down to 36. It wasn't a full stop out, but I messed a couple of things up today. And I had a break even there. And then from here we went from 36 to 44. And then break even, then 44 to 54. And then 54 to 56. And then there should be a couple more trades in here. There they are. 56 to 68, and then 68 to 72. Whew. That was a lot of trading this morning on the ES. And there were a bunch more trades in there. There's one more there that I took. That was a break even. But there are a bunch more trades in there that I didn't take. And if you just look at all these things, you know, if let's say you were just trading with the trend, you were taking just trades with the trend. Okay, so you would get rid of the slingshot like this. And you would only be interested in things that go into the oversold, right? Things that go into the oversold. So every one of these white stars would have been an entry bar, right? Every one of the white stars would have been an entry bar for you. And no, I'm sorry, that's not true. Every time it goes into the oversold would have been an entry bar for you. So not every one of the white stars. That would have been, 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 and that one would have been. And if you look at them, now if we put this back over here and you look at the totals on the upside, right here, you put the buy profit ticks. This is a 7-tick range. So that one there had 7 ticks in it. That one there had 6 ticks in it. That one had 7 ticks in it. That one had 7 ticks in it. That one had 2 ticks, but the next bar had 7 and went a little further on the bar after that. That one had 2 ticks, but the next bar, depending on where you entered on that, you might have stopped out on that one right there. That might have been your first stop out, right? Now remember, we're not trying to trade 100 times a day. We're trying to get in there and get our goal for the day and stop trading, right? And on crazy volatile days like this, you know, even if the markets start to get really crazy and volatile, you got to keep that in mind. The more you trade, the more you're at risk. I know there's a lot of opportunity out there, but the more you trade, the more you're at risk. And so if you just commit to just getting in there and getting the goal for the day. I want to show you guys something. This was from one of our guys yesterday. Let me see if I can pick this out of here. Here it is. This was from one of our guys yesterday at 12. And hang on, it failed to open the file. There it is. Okay, this was from one of our guys yesterday who sent me this yesterday. He's doing the Apex thing, which, you know, with what we have going on here, the Apex thing works out pretty well. So I have to cancel that top step thing. But consistently profitable, stopping at 500 a day. Right, 500 a day. He's up 7,000 on his 50,000 Apex account, and he's taking, you know, he's getting money taken out of it now. Just consistently profitable. Have a goal for the day. Get in there. You know, your goal doesn't have to be the same as my goal. It can be bigger. It can be smaller. Whatever you want it to be. But it has to be something that you can get every single day. Just get in there, get your goal, and stop. Right. The markets right now, they're so volatile. They're going to give a ton of opportunity, but that opportunity goes both ways. You know, if you get in there and you just get in a bad patch and you stop out 4 times in a row, you know, you're going to wipe out a lot of gains. So I just want you to be cautious, right? Find the one thing that works. You only need one thing that works for you over and over and over. That one edge, that's all you need, and execute that edge, all right? When there's a ton of opportunity like this, people tend to overtrade, and that's not a good thing. All right, overtrading is not a good thing. No, if the markets are volatile and they're not choppy and they're trending, then take the trend trades. All right, stick with the trend. It's an easy enough process. Those of you guys that are in here that are doing this, just under the YBR, you're taking shorts. Above the YBR, you're taking longs. It's a simple process. Not a lot of change in thought or anything like that. It just limits the trades. You're not taking counter trend trades that way. Okay. When you're in a strong trend, that's when you're gonna get the flat spots on the legs. The longer legs is when you're gonna get the flat spots. You should have the pullbacks where you're gonna enter the trade with the trend is where you should not have the flat spot. All right. The longer legs when it's going down is where you should get the flat spot. That makes sense? Let me draw it for you so you can understand it. Now, the way it works out is price pulls back like this, and down here in the slingshot, this pulls back like this. Now that pullback is shorter than this long leg down. That long leg down goes down to the bottom and then goes sideways once it gets down to the bottom. Just keeps going sideways because it can't go any lower than minus 100. Right, so it just goes sideways once it's down there at minus 100 as the price keeps going down. You see? So this leg down is what's going to create that. So you don't want to be taking trades going long when you have long legs down like that. You don't want to be taking counter trend trades when you have long legs down like that. You know, if you're in a strong trend, like we have been many times, stick with the trend trades. It's not a hard transition. Okay, or just do the trend trades only anyway. You know, and there's two kinds of trend trades. One is the aggressive trend trade when it just pulls back and it hits it like that, and you sell the open of the next bar right there. Right. The other is to wait until it comes out of the overbought, and then you sell the close of the next bar. Okay, instead of selling the open of this bar, you sell the close of that bar, and that's going to put you in on this bar instead. Okay, it's as simple as that. Now, you guys are all smart. You can all see this. And these volatile markets, they are very tradable. Don't overtrade. You know, be careful. This is your money. Even if you're doing the Apex thing, you're paying to do the Apex thing, so it's still your money. And really, if you're doing the Apex thing or the Top Step thing, whatever those what do you call those? Funded things. If you're doing any one of those things and you don't treat it like it's real money, then you might as well just not do it. Just use a regular paper trading account. Okay. Because if you don't treat it like it's real money, then you're going to end up wasting every cent you spend on it. All right. Now, see if we have any trades. I put this back on the NQ. On the ES right here, we do have, well, it's pulled up into the overbought with the trend, right? But this pullback, this last one didn't push down and we made a higher swing. So right now what we have is, we have higher highs and lower lows going on. So it's really going to have to make up its mind what it's going to do right here, right now. This is a counter trend long trade on the ES. It's a counter trend long trade. Now it's only counter trend because it's below the YBR. This right here sort of established a trend, and this is a 50% pullback of this leg up. So this should actually work out, all right? Unless, and look at the way the markets come together here, unless you count this is the leg down and this is the leg up, and then that's going to be the next leg down. And that's what it looks like it's really doing here. Okay, let me draw that for you so you can see it a little bit better. This is what I'm trying to get. This is your leg down, this is your leg up, and this right here should be the next leg down. Okay. So I don't know what time frame I'd have to go to make that look real to you, but that's what it's looking like it's going to do to me. Right. So if you stuck with the trend and you did the conservative trade, where you sold it when it came out of the overbought, you would have shorted right here at the open of that bar. If you did the aggressive trade, you would have shorted the open of this bar, and you would have gotten a break even on it, went 5 ticks into profit. So you would have gotten a break even on it and been out of it. Okay, but this is what it should do right now. If we break down below this level right here, then this level's next, and then this level's next. I don't think it's going to go straight down. It did 2 pullbacks in the last one, but it has this gap right here that it needs to fill, which it just did fill. That's what the markets are doing. That's what it looks like to me anyway. Okay. So put that there. And this here, we don't have a trade there. We don't have a trade there. We don't have a trade here. Let me put this back on and see if we had anything. No. It's okay. All right. Anybody have any questions about anything? None of you? Any of you? No. All right. Well, I want to just show this one more time. Okay, this is one of our guys who's been with us for for a while, for years. And he's doing the Apex thing now. And he's got a goal of 500 per day. Now, I don't know how many contracts he's doing to get to that 500. He could have 5 contracts on to get to that 500. But just consistently getting that. He's working his regular job still. It's just looking for a second income. It can be done. You just got to be consistently profitable. If you do the same stuff, if you act the same way, you have consistent actions, you should have consistent results. Okay. All right. So we're kind of jammed up here. We don't have, here's one on gold. Now this is going to be a counter trend trade right here on gold. It's too late right now. The entry point should have been right here at the open of that bar was your entry point. It was a counter trend trade right there. You see you're below the YBR, but it worked out just fine. Now, this is your leg down. So this is where that should go up to. It should go up to about right here. All right, that's what it should do. I don't know that it's going to do that much all at once, but that's what it should do. And then it should push down again, a big leg down. That's what you should be looking at. Okay. All right, so this is a long trade right here on the, oops, nope, maybe it's not. I thought it was, I guess the black didn't print. When I get my new computer, it should be coming in today. I get my new computer. We shouldn't have those issues down there, but I'm not printing. This is a short trade here on the ES right now. Okay, the blue did lead up into the overbought right there. Okay, and I don't know why we just had that gap up. I don't know what's going on with the markets, why it's gapping like that. But it gapped on the NQ, it gapped on the ES, and it gapped on the Russell. All right, well, that's going to be it, guys. We are going to have to wrap it up. I've run out of time, but the only trade we took was a stop out on gold, I think, in this session. There's a couple more setting up right here. There was a short that just set up right here. Let's see, it went minimum of 7 ticks in profit. There's a long one set up on the Russell, and that's about it. I guess with that, we can wrap it up and send it out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. If you haven't taken a trial, go to mytradingiq.com and click on the purple button. Okay, and that is it.
Okay, recap of the morning session.
Today, Dwayne, it took me 10 minutes and 3 trades to get to $2,600 with 10 contracts on.
Good job.
Thank you.
Okay, guys, we had just finished up with crude. This was the open. Missed hitting the short target by 4 ticks. Support will always in the market looking for resistance. So you can see we consolidated the BBC, then we consolidated at the zone, and then we went from zone to zone. Hit the long target. We're now back below the BBC. We got red and falling overhead, and support is at 6610/15. The low of this candle is 6617. 6617. So came within 2 ticks of hitting the zone. This next candle will probably hit it. Keep in mind you've got a bullish cross right here. That is potential support. Okay. On gold. This was the open last night. We dropped pretty quick. Now remember, the targets were out 5 minutes ahead of the open, so we dropped right to the short target on the second 30-minute candle. Red and falling turned to blue and climbing, and this time, even though the pullback holds more often than not, we know eventually it will trade through, and this is where it traded through and found resistance at the zone. When price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance until proven otherwise. Same zone, support yesterday, resistance today. So, from this resistance, we pull back into the VBC. The pullback holds more often than not. That support, give us a leg, a retracement, and a leg. Okay. Through the target at 29.10 and take us all the way up to the zone overhead, 29.21. Now, look how blue and climbing has gotten directly above price. You've got all these wicks sticking up. Buyers are trying to run it up, but it's not sticking. This high here, now this is going all the way back. This is Friday over here. Okay, it's market structure. You would expect potential resistance there. The next spot you would expect potential resistance is up here. Okay, so we've done some wide-ranging consolidation at the zone. Only three things happen when price encounters the zone. 70% of the times consolidation, 20% of the times rejection, 10% of the time is the slice. So, need to take out this high, something like 29.31 up to 29.32. That would be sufficient to get your goal for the day. Now, you may get another green candle here, but look at how all of these candles, those wicks, should really have you thinking that on this pullback, there's a potential the pullback doesn't hold. It may. We'll see. We still got plenty of time left to trade today. And on silver, here's where we opened last night. This was the opening candle. And we dropped to the short target. Support sends us up to resistance at the zone. We'll consolidate for a few hours. Pull back to the zone, the pullback holds. Or pull back to the BBC and the pullback holds. And that gives us a leg up to the zone overhead. Then we get a leg, a retracement, a leg. We spike the zone, but the zone, in both cases, we closed well below it. Now we're just kind of moving sideways. If we continue to consolidate sideways, what will happen is the BBC will rise to meet price. Now it's a different dynamic when price drops to the BBC and the BBC rises to meet price. So I could see us potentially just consolidating sideways, perhaps into the close. So one last look at the daily chart. We are definitely below the 62% fib retracement. Now we talked about the next spot for major support being right there. We're almost there. And then below that, there. Okay. All right. Now I said earlier that I was going to share something that I posted in the discussion group. last night. I'll just bring it up here. Okay. This is this from yesterday at the time I posted this. The 62% daily Fib gave another nice bounce. If 62% doesn't hold, that's going to open the door to things many newish traders have never seen before. Whatever happens, we will recover at some point. Bring up a chart of the .com crash and the 2007/2008 financial crash, and then look where we are now. At the moment, it looks bad, may get worse, but the indices will always go higher over time. Remember, it takes financial commitment for price to rise. That's why markets fall quicker than they rise. So hang in there, okay? And as I try to do each day, if I'm going to publish the CTAs before the open, I put a note in here. I went on to say, any Logic 247 alerts tonight will still be based on last week's weekly trading zones, just as happens when Monday is a holiday. I assure you, however, today was no picnic. Get it? Holiday picnic. Weekly trading zones for this week will publish tomorrow morning. That's today. And they did at 6:15 a.m. Eastern. All alerts after that will be based on this week's new zones. Let me give you a heads up. They make it look a little wonky. The markets overall are in a dangerous and precarious position. My best advice this week is to exercise extreme caution or even move to the sidelines until the FUD, fear, uncertainty, and doubt, is removed. If there were ever a week where I might consider not even publishing the zones after 15 years, this would be it. However, fear is one of the enemy's greatest tools. The most often repeated phrase in the entire Bible is, fear not. Therefore, right or wrong, expect the zones tomorrow morning. That was this morning. I wrote this yesterday. The only reason they weren't published yesterday morning, as they normally are, was a technical glitch on the computer I used for that purpose. I wish you all the very best. So, a lot of fear, uncertainty, and doubt in the markets. No doubt about it. And what's it going to take to turn the tide? Could be here. Could be here. I mean, accept the reality. We could do 100% retracement. The markets have not had a thrashing like this in a very long time. In fact, half the money managers on Wall Street have never traded a bear market. Think about that. To become a member, send an email to support@cfrn.net. In the subject line, put I want to become a member. In the body of the email, put your name, your phone number. We'll send you an email that explains what it means to become a passport holder and provide you with a link that you can click and become a passport holder. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. It's that simple. Well, I bought a course and, I bought all these books and I watched all these YouTube videos. Nothing wrong with any of those. They're just no exception for a living, breathing teacher, trading in live markets and answering all of your questions while you trade along in your demo account to qualify to go live. Now, it's an interactive training environment. That means you're watching, you're trading, and you're asking every question that pops into your head. It's a mechanical trading methodology. So pretty soon, you're going to run out of questions. Or you'll find yourself asking the same question again, realizing you already know the answer. Or you'll word it a little differently, but you'll still get the same answer. I mean, with a mechanical trading methodology, there's really only so many questions that you can ask, unless it's some really complicated mechanical methodology. Trading's not easy, but we've spent almost 20 years doing our very best to make it simple. Along with the group training, you get 2 hours, or not 2 hours, along with the 2 hours of group training every day. You also have access to private one-on-one mentoring, the strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts round the clock. The concierge trade alerts the second they're published each evening. On Monday mornings, you'll get the weekly trading zones at 6:15 a.m. Eastern. And once they're published, they are carved in stone for the entire week. They don't change in any way whatsoever. And you're able to attend the members only workshop every Thursday night, 8 p.m. Eastern. And you get the golden key that opens all the private channels in Telegram. We have public channels, we have private channels, but as a passport holder, you have access to everything. Everything a trader needs, all under one roof, one low price. You can visit us at mytradingiq.com or just send that email straight to support@cfrn.net. Okay, let's wrap it up with our good word for the day. Yesterday our topic was prepare yourself. Today, the breaking process, part 1. Psalm 51:17. The sacrifices of God are a broken spirit. Brokenness is the process by which God strips us of pride and self-sufficiency so that the character of Christ can shine through. Brokenness doesn't necessarily mean experiencing some tragedy. Many people suffer tragedy without drawing closer to God. The issue in brokenness is not so much your circumstances, but your response to your circumstances. What's God trying to teach you? Brokenness is when God strips you of self-sufficiency to the extent that you have no strength left to fix yourself. When He blocks every exit you try to take, and you come to see that He alone is the answer, you make a life-changing discovery. What's that? When God is all you have, God is all you need. The truth is that God's power is reserved for those who've given up trying to do it in their own strength or accomplish it for their own ends. Sacrifice means something has to die on an altar. So if you want to experience a new level of God's grace and power in your life, you must be willing to die to self, interest, ego, and independence. For a plant to rise from the soil, the seed must be broken. For a baby chick to experience life, the shell must be broken. For a thoroughbred horse to win, it must be broken in and harnessed. After a breaking encounter with Christ on the Damascus Road, Paul prayed, "Lord, what do you want me to do?" Acts 9:6. Are you in the breaking process today? Well, here's your options. Number 1, you can resist. Number 2, you can run. Or number 3, you can respond and say, "Yes, Lord." And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.